Hello, my name is Sandy Hood, and what we're doing is looking at one of the ACCA F9 questions called Flit. It's from the December 2014 exam. Here is the question, and as you can see, it's worth 10 marks. I'll move on to the next slide to show you how this would be presented in one of the computer-based exams. And so in a computer-based exam, you'd have the scenario much as we've just seen on the previous slide. Obviously, what you can see at the moment is very small, but it doesn't really matter that you can't read the words. It's just the layout that I want you to see. And most importantly, over on the right-hand side, you can see that there's an Excel spreadsheet. And we're going to look at this question as if it was in the computer-based exam. So we're going to use the Excel spreadsheet. Here's the original question. So it's about a company called Flit Co. It's preparing a cash flow forecast. At the bottom, it's asked us for a cash balance, for a current ratio, and for some advice about how to invest a surplus funds, and in particular, whether the use of a large stock market shares, shares that are quoted on the stock market, would be a good place to invest. Now, if you want to get hold of this particular question, you can use the ACCA ACCA Global website, and here is the link. It's section B, question 1. Otherwise, if you're using the Kaplan book, it's in the exam revision kit, and it's question 9. Well, it's the first 3 parts of question 19. They've sort of brought together 2 old questions into a 20 marker, whereas I'm just sticking with the first 10 marks. Okay. So it's applicable to the current syllabus. Obviously, the section C questions are worth 20 marks, but they do tend to break them down into sub-questions, and there's typically 3 sub-questions for a 20-mark question that may well follow this sort of pattern of 7, 8, and 5. But because the original was marked out of 10, I'm continuing with this video on that basis, and we're going to look at it in terms of how to tackle it within 18 minutes. This is my Excel setup. So what you can see on this screen is the question itself that I've cut and paste and put into an Excel spreadsheet so that I can see it, and then you can see the slightly darker line where my cursor is. And that is where I've frozen the view so that I can scroll up and down but continue to see the question. Now, I think the idea of the 18 minutes is very valuable. In your exam, you will have in your top right-hand corner the time remaining. And I think that this is very, very valuable in terms of being able to manage your exam. And if you can manage the 18 minutes so that you can maximize your marks, then I think that will be successful. You don't necessarily need to get full marks, but you do need to manage the time well to make sure that you make the best use of it. As you're well aware, 50% is what you need to pass, and I'll certainly show you how to answer questions such as this within 18 minutes. Okay. So what we would do is we would start off by making some sort of a plan, and I think that reading and planning takes time, so I would allocate 4 minutes of my 18 minutes to just reading and planning the answer. That would leave me with 14 minutes, and I think you can see why I'm emphasizing the time remaining, because instantly when you look at the screen you can see how much time is remaining in that top right hand corner. And here we've got a cash budget which I have based on the idea of it being 1.4 minutes per mark. Then we'd have 7 minutes available for that. That would bring our time down to 7. And then because the current ratio question is 2 marks, well, 2 times 1.4 is just under 3 minutes. But yeah, I've allocated 3 minutes to that. And then we've got 3 marks at 1.4 minutes a mark, which would be 4.2, but then I've scaled that down a little bit. So that gives me the breakdown of how I'm going to allocate my time, and that would be valuable. I think whichever order you do your answers in, you do need to be keeping an eye on the time remaining in that top right hand corner, because to get those marks, to get the 5+ marks that you need in order to pass, you do need to make sure that you are managing the time. Otherwise, you overspend time, and cash budget questions are particularly vulnerable to overtime, and that would deny you the opportunity of the 3 marks for the third question. So you just need to be very, very careful. I've now taken the question, and as I would if I was planning, and I've given myself 4 minutes of planning, which is fairly generous. And I know that I'm going to be looking for a receivables balance, a payables balance, and a cash balance, so that I'm able to answer the question. And I think that when you're thinking along these lines, particularly in exams such as F9 or F7, you're recognising those parts of the question that earn the greatest number of marks. Now, I just thought before we start, we'd just check the sequence, because I'm planning to use the order given, the A, then the B, then the C. But it's dawned on me that may not be the best way to ensure that I get 5 or more out of 10. You see, the short-term investment question is worth 3 marks. This is quite common. The wordy questions tend to be quite generously marked. So this time, I'm going to look at doing that first, because I think by answering the wordy question, I'm able to make sure that I answer it. I reckon I can get the 3 marks quite easily, and I don't know how long the extra sums and workings are going to take in order for me to get the marks for the cash budget. I think the other thing about this particular question is that the current ratio is going to come off the cash budget. Not that I'll necessarily use the cash budget if I'm running really tight for time. I'll stop and I will put together some numbers and then just show the examiner I know how to calculate a current ratio, which is fine because they work on what's called an own figure rule. But even so, we're going to start with C first. So now I'm doing the short-term investment question first, and then I'm going to do the cash budget and then the current ratio. And so let me set my timer. Set the timer 18 minutes. Okay, so should a 3-month cash surplus be invested in shares? Well, I think we need a little structure for this as well. So we're going to talk about liquidity, risk, return, and recommendation. There's got to be a recommendation because we've been asked for it. So we know that of the 3 marks, the chances are that one of them is going to be for the recommendation. And the other 2 are going to be for the recognition in terms of what this sort of question is looking for. Now, we know that cash surpluses, we've got this liquidity profitability issue. Those of you who are using the Kaplan textbook will be well aware that there's a balance on almost every second page of liquidity and profitability. So we're going to follow that sort of approach. So here's my first paragraph. The cash will be needed in 3 months. The investment chosen should be where it can be easily accessed at that time, and listed shares can be sold quickly and they meet the liquidity requirement. So the shares look all right from a liquidity point of view. Basically, we need to have the cash at the end of 3 months. We may even need to dip into it between now and then, but that's the nature of a surplus cash that we have at the moment, that we're able to deal with it, and so we want some form of liquidity in terms of the type of investment that we choose. Now, risk and return, I think, although my plan had them as 2 separate ones, I think that they merge in together, and the shares can increase in value or they can fall. and the state of the stock market will affect the value of the investment. So Flit, our company, will want to take back at least as much as they invest. They don't want to lose any money. They're not in the business of being a speculator buying shares because they're buying shares. They're just using the stock market, if they do, as a means to try and store their value and hopefully add something to it. So because they want to take it back after 3 months, the chances are that the stock market could well have fallen. And if that happens, then the value will have fallen itself and they will have made a capital loss. So in that case, the risk makes the shares an inappropriate investment. And if I make a recommendation, it's that Flit should avoid using shares as a way to invest in surplus funds. Instead, an interest-bearing instant access bank account will ensure that they can withdraw the money in 3 months with a small amount of interest on top. Fine, job done. Moving on. So now we're looking at the cash budget. And sure enough, there was a little bit of pre-written aspects with the previous task, but you can see that I'm checking this time all the time. So we're going to look at the cash budget. Let's see how we get on with this. Flit is preparing cash budget, and we've got the sales, the selling price, and the selling price is due to increase. Production of goods takes place a month before the sales. So I think we need to have a production budget. Now, you've got to bear in mind that the examiner's looking for the cash balance, so you don't need to have a lot of factors within it. You just need to be able to find it yourself and be able to show it in such a way that the examiner can follow what you're doing. We've got the months of December and so on, and of course we've got the advantage of the spreadsheet, which means that we can just drag our months along. Sales were given, the December sales are 1,200, the January 1,250, February 1,300, March 1,400, and April 1,500. We're going to need those figures in a minute or two, but at the moment we know that the production of goods for sale takes place 1 month before the sales. So the production in December is going to be 1,250, and almost based on that we can similarly come up with our production figures here. So we're dealing in units at the moment. If I do my sales receipts, I know that, for example, each unit is sold at a price of 800 in December and January, and in February they go up by 5%. So use the spreadsheet, 1.05 times 800, and then it just equals the previous figure. So we're going to have the sales revenue of units sold times selling price. These ones for December and so on are not really all that important, but what we've got in there is the figures that we need. We're also told that they're sold on credit, so the receipt is going to be 1 month later, and at that point you understand why it's so important that we get the December figures. Next we move on to payments. We know that the purchases involve raw materials, and the raw material units is going to be 2 units for every product produced, Well, we've got our production figures already. They're here on row 23. So it's row 23 times 2 units for every product that we make, and that's giving me the raw material that we use. And then we know that that's going to cost us $200. So I can say $200, and of course we can use our F4 times the number of raw materials, and I've managed to get something wrong there. Let me just see, B32 times C31. Not quite sure what I've done wrong. Oh, I know what it is. It's because I've put that $sign in there. Okay. So here I've got the value of the raw materials, and we're told as well that raw materials are purchased on 1 month's credit. So the payment is going to be 1 month later, and we just drag those across again. What else do we know? The variable overheads and wages equal 100 per unit produced and are paid in the month of production. So this is variable overheads. And interestingly, you can see how I've overrun my time. So I'm going to show you what I would do at this point. I would stop. Hang on, I've not overrun my time, have I? No, sorry. Yes, I have. Yeah, I'd allocated a certain amount of time for this, and it looks as if I'm taking too much. So I would now start to get myself ready for my finishing off part, which is the closing balance. Oh, sorry, net cash flow. I don't think I'm not quite as too bad as I thought. Opening balance at the beginning of January is 40,000. My net cash flow I'm not sure of yet. Closing balance at the end of January is going to be whatever the net cash flow is plus the opening balance, and that I can run along. And here my closing balance is going to be my opening balance the following month. And although all these figures look wrong, it's because I haven't done the adding up yet. And here I've got the long-term loan being in March, so there's nothing to have in that month, and we're going to have 40,000 coming in. And then we've got the machine purchase, which is going to be 400,000, so I've got that completely wrong, 300,000 and 400,000 going out. So if I now look at my net cash flow, I want the pluses, which is the long-term loan plus the receipt, drag that across. No. And then I want the minuses, which are the payments, the variable overheads, and the machine. And I now have, at 5 minutes, with 5 minutes 44 seconds to go, I've got my 3 closing balances. So I did panic slightly earlier and thought that I haven't got enough time, but I have. So now I move on to the current ratio. And I know that the current ratio is going to be made up of inventory, trade receivables, cash, and trade payables. Now, fortunately, because I was using the spreadsheet, I was able to do some work on the trade receivables and the payables, so I'll get those in straight away. Trade receivables would be the receipt for April, and trade payables would be the value for April in the payments section. And cash, we know, is the figure that's come from the closing balance at the end of the 3 months. Inventory, we're dealing with finished goods, so we know that the finished goods are going to be the unsold production. So we've got production in March of 1500, so it's going to be 1500 units, and they are made up of a cost of 2 units at 200 plus, so that's 400 for the materials plus 100 for the variable overheads and wages, so that's 500. So the inventory of finished goods is worth 1,500 units at $500 each, 750,000, giving me current assets worth, we might as well sum it, 2,918,000, and we've got payables worth 60,000. So the current ratio is going to be that divided by 60,000 or 600,000, give me 4.86. Maybe round it off, maybe not, and I've done the job. In fact, I've been very pleased with myself because I've done the job with 2 minutes 52 seconds to spare. So returning to the slides, I hope you found that useful. If you are interested in my courses, then you can contact me at sandy@sandyhood.com. Thank you, and goodbye.